This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms. Carol Massar, along with Bloomberg News credit reporter Emily Grafeo. Emily in for Tim, who is off on this Friday. And you are joining us on a day where we see chip stocks poised for a bear market, the AI trade continuing to unwind. I'm obsessed with, yes, there's news locally, right? And companies that we watch here in the U.S., but there's also some news coming out of China, and I really want to get to the bottom of it.
It definitely feels like the market was waiting for a DeepSeek moment 2.0, and are we in it right now? We're going to ask multiple guests this hour, Carol.
It's definitely a theme for us on this Friday as we get ready to wrap up the trading week. So more in just a moment. Also, from the C-suite, as we like to do on a Friday, Samantha Greenberg, CFO over at AlphaSense. She's going to join us with our own Nina Trentman, who writes the CFO briefing newsletter that comes out every week. And we're going to talk agentic momentum and also being a platform that makes AI useful in finance. We know a little bit about that.
And we're wrapping up the World Cup. It's not over yet,
Nope.
But as it wraps up this weekend, it's been a ratings boom, we hear, for Telemundo. We'll find out by how much from Miguel Lorenzo, Senior VP of Sports Content at NBCUniversal, Telemundo Enterprises. Maybe we'll get his game prediction as well.
Our Sebastian Escobar saying that so many people, he caught something read from AP that everybody is tuning in, even if you don't speak Spanish, because you just love the coverage that Telemundo has been doing. All right, we're going to get to it, folks. A lot coming your way over the next 60 minutes here on Bloomberg Businessweek Daily. Let's get you going, though, with a check on the trade. Here's Charlie Pellet.
Hi, thank you very much. And we're looking at a whole lot of red right here with the Dow, the S&P, NASDAQ, all declining. Yes, on track for a losing week after 2 up weeks, but the S&P right now down 61, mid-afternoon 74.71 where we stand, just under 2 hours to go ahead of the close. Right now on the S&P 500 index, looking at a drop there of just about 0.8%. Dow Industrials, they are lower by 287, down by about 0.5%. We've got NASDAQ lower by 1.1%. The NASDAQ 100 index also down by 1.1%. The Russell 2000 index of small cap shares down by 0.4%. Interesting day for the stocks. Last hour, the index, the Philadelphia Semiconductor Stock Index, actually was trading higher, little change, but right now the stocks once again resuming its losses, down now by 0.7%. The VIX now above 18, a 10-year yield at 4.54%, the 2-year 4.17%. Gold up $33 the ounce, 4,009, up by about 0.8%. Crude, major story there. We've got West Texas Intermediate, 82.37 a barrel, up by 4.3%. Traders certainly keeping an eye on developments in the Middle East. Brent crude, 87.93, up by 4.4%. All of this with gasoline heading back to $4 a gallon. Semiconductor shares, as I mentioned, trading lower. Again, bears repeating on the stocks. Right now, that index is down by 0.7%. Among some of those semiconductor names, right now we've got Qualcomm down 0.2%. Applied Materials down 4.5%. Intel lower by 0.6%. Interestingly, though, Micron up by 3.4%. Round 2 of the Open Championship underway at the Royal Birkdale Golf Club in Southport, England. Now we have Lucas Herbert leading on the top of the leaderboard at 8 under par. Herbert, by the way, from Australia. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along here with Emily Grafeo in for Tim. All right, so let's get to it. There's a lot of stuff going on. As I said, I'm obsessed with some of the news out of China. A surprise breakthrough from Chinese AI startup Moonshot rippling through global markets. We're seeing that play out. It started overnight in Asia. Semiconductor stocks, Charlie just talked about it, sharply lower. We're kind of thinking, is this another DeepSeek moment? You had President Xi Jinping also overnight, his first appearance at China's premier AI summit, lending his support to the country's push to become a global leader in AI. And, you know, you've also got Alphabet tanking. There's another story kind of at play here.
Right. Shares of Alphabet tanking as Google is months behind on schedule on delivering Gemini 3.5 Pro, its most powerful flagship AI model. It's trying to improve its capabilities, particularly in codings. And then the credit markets are also reacting to this AI trade. We got to talk about credit, Carol.
The bonds sold by hyperscalers to fuel their AI ambitions have become a drag on investor portfolios, with falling prices and wider spreads to negative total returns. That is certainly your world. I feel like it's a lot, but it is always when it comes to what's going on with AI. We wanted to check in once again with Mandeep Singh. He's Bloomberg Intelligence Global Head of Technology Research. Mandeep, I feel like we have the same conversation with you over and over again, but there's stuff that keeps coming at us. SK Hynix ADRs too are bouncing around. The Kospi route feels like nervousness continues to grow increasingly out of this AI trade. Is it fundamentally based? Is it valuation based? Is it just a little bit of fear of people being on the wrong side of the trade? You watch the fundamentals. You always remind us what matters. So how do you see it?
Yeah. I would agree with your assessment that it is fundamentals that are still holding up, and it's the valuations and the nervousness around positioning is what is driving this sort of volatility. And look, we know AI being expensive has been raised as a concern by a lot of companies lately. So it doesn't surprise me that, a model like Kimi 3, which is an open rate model, much cheaper to use, is gaining traction. And there are companies out there that have explored using this model, notably Cursor, which is a company that XAI and SpaceX bought. They use Kimi 3 under the covers. And so from that perspective, open source will have some sort of adoption, but fundamentally nothing has changed. Everyone wants to use LLMs. It's just that they were expensive. That's why we had concerns around memory pricing. And, now we are talking about open source adoption, but I don't think fundamentally anything has changed. It's just a function of how folks were positioned when it comes to the valuations, and certain sectors have gone parabolic within the tech space, and you're seeing a drawdown over there.
Mandeep, tell us about this new Chinese AI model, because as Carol and I were discussing just a few minutes ago, it wasn't too long ago in markets that we had that DeepSeek moment, that scare when a new model from a different country comes out and spooks the market. Is this just a DeepSeek 2.0? Is there something different about Moonshot? And when you look at the market right now, is it really reflecting the same type of fear that we saw when the DeepSeek model was released a little over a year ago?
Yeah, look at how far we have come since that DeepSeek moment. We had a company like Anthropic grow from, 9 billion revenue run rate to 47 billion run rate in 6 months. So that's despite DeepSeek. And so, look, open source gaining traction is something that has carried forward. I should stand corrected. It's open weight, not open source. But all these companies are looking for ways to reduce their, inference pricing, which is very expensive for frontier models. And we have been compute constrained. Those are the things that reflect the fundamentals. Everything else around, nervousness around DeepSeek and new types of models just shows that there is a lot of investment being made. Companies are exploring how to reduce their costs, but they want to consume more capacity and deploy as much of LLM functionality as they can. So from that perspective, the fundamentals are still good. And that's what's reflected in the revenue run rates of these companies and the demand that we have seen, in terms of the backlog. And we'll hear more from hyperscalers when they report, over the next 2 weeks in terms of how they're guiding around their CapEx numbers.
All right. So we're gonna talk a little bit more too about the China angle with a member of two of our AI team in just a moment. But I want to talk about one of the hyperscalers. And as you said, we got to watch and see what they say on earnings. But we've been watching shares of Alphabet. Stock has been down almost 3.7% at its lows today. Down right now, still about 3%. Talk to us about this news. We highlighted yesterday late the delay of that Google Gemini launch. What do we need to know about this? What does it indicate for Alphabet and more broadly for the AI story?
Yeah, this is such a fast-moving space that if you have a delay in the release of your model and your competitors have rolled out, new models that are getting a lot of attention, like Kimi 3 did with, some of the new functionality in terms of coding agents and established use cases, that is where Alphabet, because maybe they lost, some of their key researchers on the LLM side, that may have had an impact. I don't know the reason for the delays, but for a frontier model company like Alphabet that has a lot going for them in terms of the chip side and the cloud business, a delay of the model is certainly a setback. I do think they will release something soon, but for now, I think it's right to see that getting reflected, because you can't afford to not be on the frontier if you're a hyperscaler right now.
All right. So Mandeep, a good buddy, you're watching the World Cup this week and turns to you and says, Mandeep, what the heck's going on? Like, should I pull all my AI investments? What would you say?
No, I think you just got to ride out these volatile phases. And look, there may be some changes in terms of what's going on in the memory complex. If Apple they're looking to get CXMT qualified for use, that is a big deal. Now, those are the type of things that have a bearing on the market. But on the demand side, when it comes to LLMs and the need to deploy LLMs and inference tokens, that I think will hold good, because everyone knows that there are established use cases around these LLMs.
All right, so I'm going to read that as Mandeep Singh saying, take a chill pill for a little bit, everybody. All right. Mandeep, thank you as always. Have a great weekend. Mandeep Singh, he's Bloomberg Intelligence Global Head of Technology Research. We lean on him so much, and we did a lot this week because of the news flow. Hey, we're going to stay on tech, Emily and I, and the AI build, trade, and threats and concerns. I want to go a little bit more into what is going on when it comes to China and AI. I'm like perplexed, and I know Mandeep just addressed it. Let's get to a member of our team on the AI Watch. That is Seth Fiegerman. He is Bloomberg News AI editor. Seth, good to have you here with us. We just talked with Mandeep about the trade today, the news out of China, President Xi kind of being all in, no surprise, right, when it comes to building up China's presence in AI and moving along. The AI race and nervousness from you and the team's reporting, what's your take on all of this? What are you hearing from those in the industry?
Yeah, I think a lot of the narrative for the last year and a half post DeepSeek was that we were seeing Chinese rivals put out credible models for lower costs that can undercut top US AI firms, but we weren't really seeing any of these firms compete at what they call the frontier, the absolute cutting edge of AI technology. And so I think part of what's jarring about this announcement, at least at first blush, is whether Kimi and Moonshot are now at that level. And I think there's mixed reactions in the industry so far as we continue to report this out. And there's a joke sort of that, it takes the worst time to review a new model is the day it comes out. You need to kind of live with it and see how it kind of socializes and gets used day by day. But it's clear that the capabilities of this model from what they publicly disclosed match or exceed those of models from US firms that were released as recently as a month or two ago. So suddenly the question is China 6 to 12 months behind, as some had thought, or is it really just 1 or 2 months behind? And the difference could be pretty monumental.
And talk about just what makes the product so competitive, because it's not just competitive on price, right? They're going for more of a premium kind of high quality model and looking to attract buyers who maybe aren't as price sensitive.
Yeah, this is, as you said, priced like a premium model. I think is the most expensive model that we've seen come out from China at this point, certainly among the open weight sides. It's comparable to some of the mid-tier offerings from Anthropic with its Sonnet models. This is a little bit different than what we've seen with DeepSeek and others, where it's really and fully a pricing game. What this is more saying this model can compete on the more advanced tasks, the agentic tasks, doing coding, for example, which has become really the lucrative and key selling point for AI technology right now. And again, it comes at a moment when we're hearing more and more that there's cost consciousness emerging among developers and businesses of how much they're spending on AI models. And I think there's a growing awareness that maybe you don't have to bet entirely on one model. Maybe you kind of have a little bit of a buffet of models that you rely on, and you can use different ones for different tasks. You may not need the absolute top of the line ones for every task. That way you can save costs. So if it prices at a premium way and starts to draw away customers who might have turned to top of the line offerings for those AI agentic tasks, that could be a meaningful hit to some of these US firms.
Seth Fiegerman, you guys follow this stuff inside and out, but I keep thinking about the EV race and the EV industry and how China is now what we are talking about, kind of nonstop, high end, low end, more affordable. And so I do wonder, China's lead when it comes to EVs, is that kind of a lesson for the US and kind of for everybody who's looking to stake their place when it comes to AI?
It's funny that you mentioned it, because again, I think that the sense has been that China is following a playbook that it's used in other industries, that it's flooded the market with more affordable models. And at least until today, the thinking was it didn't have to have the best model. It could still siphon away meaningful market share and potentially destabilize or undercut U.S. firms who are trying to make as much money as they can to offset their heavy investments here. But with this model, I think the question becomes not just whether they undercut you on price, but whether they actually are able to create comparable capabilities that compete at the cutting edge tier of AI development. And we're still not quite there, but we could be heading there sooner than we thought.
What is that going to look like in practice? How are investors going to be able to judge when they look at the various LLMs that come out of China? Is China just catching up to the US, or are they actually surpassing the US in the technology?
I don't think anyone yet thinks that China has surpassed the US. But the narrative until today had been that we thought China was a bit further behind than they might have been. Now, again, this is early days. This model just came out. People need to play with it. And one of the challenges throughout AI is that there's not always agreed upon benchmarks and leaderboards to really say this one is definitively better or worse than that one. But the initial tests that they publicize certainly suggest that it ranks near the top of models out there, but still behind the most recent offerings from OpenAI and Anthropic that came out in the last couple of months. So again, China has not surpassed the US, but it is certainly competing at a closer neck than we might have thought.
Listen, the team, though, reminding us that Airbnb runs a mix of Chinese open source models along with Western vendors. Pinterest touted their utility. Even Microsoft, one of OpenAI's biggest backers, CEO Satya Nadella saying he's considering using DeepSeek models in its Copilot co-work product. So yeah, I get it. And I feel like there is now the discussion of where are cheaper models. And you're right, not everybody needs the top of the line because it's expensive. Having said that, are there security issues? Where's the US government? Do companies need to be concerned that the government is going to maybe clamp down on this?
Yeah, I think there's a couple of different ways to answer that question. One is that the Trump administration, if they do feel that China is on the cusp of overtaking the US, might decide that that in itself is a national security concern and weigh whether it makes sense to have more restrictions there. The other is, and I think this comes more from the AI labs in the US and certainly companies like Anthropic, that a lot of this year has been defined by models that are more advanced at, say, cybersecurity capabilities and what the risks are there. And the belief has been, well, if Anthropic is the market leader, they can help kind of set precedents around what steps should be taken, what safeguards should be offered, and ultimately they can deploy their models to trusted partners first before other bad actors might exploit them. If we enter a world where China has one or more models that are more advanced or equally advanced than what we have from, say, Anthropic, would they follow those same precautions? And if they don't, what might be the societal impacts of having a widely available, more advanced open source model through a Chinese firm that hasn't gone through that same rigorous safeguarding process? We're not there yet, but those are questions I imagine folks would be asking.
A lot of questions, right, with everything and anything to do with AI still as we move forward. Hey, Seth, thank you so much for jumping on with us. Seth Fiegerman, he is Bloomberg News AI editor, joining us here on Bloomberg Businessweek Daily. All right, I'm Carol Massar along with Emily Grafeo. Coming up next, our weekly view from the CFO suite from a company that says it's not just a search engine, it's the CFO of AlphaSense stopping by. They're going to talk about what they're doing, their platform.
Are they going to go public? Are they going to remain private?
It's been a good market, but don't talk to SpaceX right now. Actually, we get to that in our 4 o'clock hour. All right, stick around. Emily and I are coming back to you right here on Bloomberg Businessweek Daily.
It's 2:20 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ all remaining in the red. We're on track for a losing week for the U.S. equity market. We're also looking at wild swings hitting chip makers. Right now, the SOX, the Philadelphia Stock Exchange Semiconductor Index, is down 1.5%. Briefly, it was positive earlier in the session. S&P, putting it all in context, now showing a loss of 1%. Again, on track for a losing week. We've got NASDAQ down 1.3%, with the NASDAQ 100 index full of big tech names down by 1.3%. The Bloomberg Mag 7 index also trading lower today, down by 1.8%. The VIX now above 18, a 10-year at 4.53%. The 2-year, 4.16%. Gold is up $35 the ounce to $4,012. Spot gold up 0.9%. West Texas Intermediate crude continues to push higher as traders keep an eye on Middle East developments. WTI now up 4.7%, 82.62 a barrel. Barrel of Brent, the global benchmark, 88.13 right now, up by 4.6%. Apple and the U.S. Justice Department are in early discussions about settling a 2024 lawsuit that alleges the iPhone maker violated antitrust laws. Our Mark Gurman says the discussions are active, but there's no guarantee that the two sides will reach an agreement. Apple shares today, they are trading down by 0.2%. A Meta Platforms in early discussions to lease computing power from its data centers to Anthropic. It's an agreement, an arrangement that could be worth as much as $10 billion over 2 years. That, according to the New York Times. Meta Platforms, part of a broader tech sell-off, down now by 2.5%. Round 2 of the Open Championship underway at the Royal Birkdale Golf Club in Southport, England. Atop the leaderboard right now, Australia's Lucas Herbert at 8 under par. Recapping stocks lore, S&P down now by 0.9%. I'm Charlie Pellet. Emily and Carol, that is a Bloomberg Business Flash.
All right, gotcha, Charlie. Thank you so much. Well, Bloomberg's Nina Trentman recently writing in the CFO Briefing newsletter about global IPOs being strong in recent months. It's certainly something, right, we've been talking about a lot, how the IPO market has come back, and then SpaceX didn't help or hurt.
And there's more coming down the pipeline as well, potentially. Yes. There are planned ones, Anthropic, OpenAI. I mean, those are the big ones.
Yeah, so like the market has finally opened up. She pointed out first-time share sales through July 10th up 250% from the prior year period, according to data compiled here at Bloomberg. One company that might be moving and working toward that is AlphaSense. It's a market intelligence and AI search platform whose CFO, Samantha Greenberg, was recently highlighted in the newsletter talking about it. So let's get to it and let's get more. Samantha joins us right now. She is, again, AlphaSense CFO. She joins us from New York. She held leadership and portfolio management roles at Citadel, Goldman Sachs, Paulson & Co. She also founded the investment firm Margate Capital Management, growing it into the third largest female-run hedge fund in the United States. So, Samantha, great to have you here. Also with us is our Nina Trentman, Bloomberg News senior editor of the CFO Briefing newsletter, which you can subscribe to at bloomberg.com/CFO/briefing. Welcome, everybody. Happy Friday. Samantha, I want to kick it off with you. And we do want to talk about that possible IPO. But first up, you guys say your platform makes AI useful in finance. Talk to us about that. That is something certainly near and dear to us here at Bloomberg. Remind us, too, exactly what you do.
Yeah, the quick answer is we are an AI market intelligence platform, and we're vertically integrated, which means we solve the full stack of automating research all in one place. We've aggregated and indexed the world's most valuable business content. We've built a context graph on top of that. We've built the AI orchestration layer and tools for reasoning and synthesis, and workflow agents that agentically perform entire research workflows in one click. And importantly, and this is a theme we're seeing in how the markets have acted recently as concerns around the cost of AI have emerged, because we, AlphaSense, own the full stack, we're able to optimize the system so that AI harness, tools, context graph, and data all work seamlessly together. And that not only makes searches and research smarter, it's a much more token efficient solution. And lastly, today we serve around 70% of the S&P 500, half the Fortune 500, 7,800 customers across all segments of the economy.
Yeah, Samantha, nice to have you. I'm just wondering, you just closed another funding round. How much more should we expect before you're considering an IPO? I know that that it's on the agenda for the company at some point.
Yep. So as you noted, we recently announced a $350 million fundraise, nearly double the valuation of our last round. We also announced a large partnership with Accenture, where our AI market intelligence and workflow automations will be available to Accenture's enterprise transformation clients. And sharing our excitement about that partnership, Accenture became a large investor in the fundraise. And so today we are focused on accelerating our product roadmap, expanding rapidly internationally, and continuing to drive innovation, and just really pleased that that product innovation and momentum are recognized by these top tier investors. And lastly, we recently announced Super Analyst, which we believe is the next step change in the value and impact of our platform.
Just to follow up on that public market idea that we put out, and then you and I have talked about this before. I'm wondering, sort of in this current environment, of course, there's a lot of companies that have AI products and that are offering those to enterprise clients. I'm wondering, if you were to be a public company, what would that do to your relationships with customers?
Yes, great question. So, you and I have spoken about the ingredients that companies consider in coming public. There has to be really compelling commercial logic, and then totally outside of companies' control, it's what's happening in the regulatory backdrop, macro market conditions, and so on. So on the commercial logic side, we, like many other companies, I'm sure it's not lost on you all as a financial audience that the number of public companies is down 50% from the 1990s, and that's because companies like AlphaSense have had no trouble accessing capital in the private markets and are getting larger and larger in the private markets. But as you think about where we sit today, selling to half the Fortune 500, the business increasingly international at 21% of ARR and rapidly growing, it certainly makes sense in shortening sales cycles. And this is true generally for companies, for international customers to not have to make it easy to diligence one's financial health by simply being able to pull an SEC filing. And similarly, while most of the innovation on our platform we've built, over time, we've made some very successful acquisitions. And again, the public markets give you that permanent capital and that at-the-ready acquisition currency, and that makes a lot of logical business sense too. So
wait. So the scale, is it tipped in favor of the IPO or not the IPO?
You would have said that's a board decision. And along those lines, this SEC proposed rulemaking is groundbreaking for private companies. It's the most significant regulatory advancement we've seen in 20 years with respect to Sarbanes-Oxley, and it explicitly removes a lot of the particularly onerous, just very expensive administrative burdens that companies have to consider in coming public.
So we talk about kind of the willingness to access capital for private companies. I'm wondering about how you're thinking about credit markets right now. Is it better to access the public bond market or the private one? There's a lot of talk right now about the growth in companies of all shapes and sizes going to the private debt market.
Great question. So fundamentally, CFO's job is to increase value creation for shareholders, and that means optimizing the cost of capital, and credit can be a very attractive tool along those lines. I will say we are primarily equity financed. So like many other tech companies, I suspect that the credit side will always be an important, but much smaller part of our financing. But it has been fascinating to watch the emergence of private credit. It has become an extremely attractive source of financing, particularly for businesses that have a large TAM, really attractive unit economics. The private credit market is just as discerning in recent months as the public markets. So you need to have that right combination of growth, market opportunity, and unit economics. But so long for companies that do, the private credit markets remain quite open alongside the public credit markets.
So then are you tapping private credit?
We have in the past. For now, and as you look at our financing history over the last year, we've primarily looked to equity finance the business, like the $350 million fundraise.
Samantha, one thing we talked about is your plans to expand internationally, use some of the funds that you raised for that. What does that entail, and which markets do you think are the additional ones that you want to tackle?
Yeah, great question. We are expanding in hubs and markets like London, Singapore, India, opening facilities in Sydney, Australia. So I joke that even AI companies have actual facilities, and so we are rapidly expanding in any number of different markets internationally, and that also includes our go-to-market engine and our customer success and sales engineering motion, as well as product and engineering.
What's your CapEx spend? And I'm just curious how that is impacting you or the cost structure of that.
Yep. So as an AI native company, our capital expenditures, are fairly low.
Okay.
Most of our R&D spend, which is quite significant, goes directly into building and shipping product.
Okay, that makes sense. Just to kind of clear it out when we are talking so much about AI and anything related. Just to wrap up, we've got about a minute or so.
I'm just curious, thinking about the current market situation that we talked about earlier. I'm wondering, of course, you have a business that gives you a little bit of visibility into contracts a little longer. I'm wondering, sort of like, what are the implications that you see from these market volatility related to AI? Does it impact your business, and if so, how?
Yeah, I think that's such a great question, Nina. So one of the things you can see loud and clear in the market action this week, but in the last couple months generally, I would say a theme that jumps out is that this era of AI at all costs is over. And in fact, enterprises are demanding evidence that their AI spend is actually producing returns. And there's this laser focus now. It's almost like waking up in a departed reality versus where we were 6 to 8 months ago, where there's laser focus on token efficiency and how to manage AI compute and token costs. And that is the ideal backdrop for exactly what AlphaSense's core value proposition is.
Yeah.
Because we're vertically integrated platform, that's token efficient.
All right, we got to run. Hey, great to check in with you. AlphaSense CFO Samantha Greenberg. She's highlighted in the recent CFO briefing newsletter. A new one is out this week, and our thanks always to Nina Trentman. She's Bloomberg News senior editor of the CFO briefing newsletter. Find it at bloomberg.com/CFO briefing. World Cup is up next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks do remain in the red, on track for a losing week for the S&P. Right now, 74.61 where we stand, down 72 on the S&P. A drop right now of just about 1%. Dow Industrials trading lower by 354 points, down by about 0.6%, while NASDAQ is lower by 1.3%. The NASDAQ 100 index down 1.3%. And the SOX, the Philadelphia Stock Exchange Semiconductor Index, it is down by 1.2%. Has been bouncing around. Earlier in the day, we did see the stocks higher briefly, but right now looking at a loss of just about 1.3%. The VIX below 19 now, with the 10-year at 4.53%, the 2-year 4.16%. Gold is advancing $34 the ounce, up by almost 0.9%. 4,010 where we stand on the precious metal. You recall yesterday we did see gold trading below 4,000. West Texas intermediate crude now up 4.2%, $82.25 a barrel. Barrel of Brent, $87.83. Brent crude up by about 4.3%. SpaceX shares remain lower. In fact, not just lower, but below the IPO price after the aerospace company scrubbed their first Starship launch since its IPO, citing engine failure. Shares of SpaceX right now down by 4.6%. Round 2 of the Open Championship underway at Royal Birkdale Golf Club in Southport, England. At last check, we are looking at Australia's Lucas Herbert topping the leaderboard at 8 under par. I'm Charlie Pellet, and Bloomberg Businessweek Daily continues now. Back we go once again, your hosts, Emily Grafeo and Carol Masser.
All right. Charlie, thank you so much. Hey, hard to believe. The World Cup wrapping up this weekend. I kind of can't get my head around it.
Who are you rooting for? Are you allowed to say?
No, I'm not going to say. Oh. Sebastian, who should I be rooting for?
Spain. Give Spain a chance.
Yeah. Okay, give Spain a chance.
If you already won, just
well, I have to
recently.
say, it's been fun to be around the newsroom. People are watching everywhere. They're watching their phones, streaming networks, you name it. And as AP reports, every match of the tournament has been available for U.S. viewers in English on Fox or FS1 or Telemundo or Universo in Spanish. And there are streaming options such as Fox One or Peacock. And what caught our attention from this AP story, thank you, Sebastian, for pointing it out for us, that the American Spanish language TV network owned by NBCUniversal, we're talking about Telemundo, points to Nielsen ratings to show that roughly half the World Cup viewers in the United States have watched at least some portion of some matches in Spanish. We wanted to know more. So joining us to talk about it is Miguel Lorenzo. He's Senior Vice President of Sports Content at NBCUniversal Telemundo Enterprises. He joins us from New Jersey. Also with us is our Vanessa Perdomo Maglione. She is Bloomberg News sports business reporter, co-host of the Business of Sports podcast. She joins us right here in our studio. Welcome, Miguel. Great to have you here. Sounds like it's been a great run this round of the World Cup. Tell us about the ratings, who's watching, and how do you know that roughly half of the World Cup viewers in the U.S. have watched at least some portion of some matches in Spanish? Talk to us about that.
Sure. Well, thank you for having me. The audience in this World Cup has been an amazing story, and I think it speaks to many things. It speaks to certainly Telemundo and Peacock's coverage of the World Cup across many different platforms. I think it also speaks to the World Cup tournament itself, whether it's the expanded field where there's more teams and there's more games, the legends like Messi and Ronaldo, the stars of the World Cup. And we can't discount the fact that it's a World Cup taking place in our backyard, in our communities. And a World Cup that is a world away is still interesting to all audiences of soccer. But when it's taking place in your country, it's hard to replicate that excitement, knowing that whether there's matches in your city, in your communities, watch parties, it's another level to it that we haven't seen since the last World Cup here in 1994. And certainly, whether it's on social media or through our coverage, the response from audiences with these matches have been amazing.
Miguel, obviously one of the things we can't ignore when we're talking about Telemundo is the iconic voice of Andrés Cantor. I mean, everyone knows that goal, everyone knows what that is and everyone knows from. Do you think that's one of the reasons why people are so invested to tune into Telemundo? Because even people who don't speak Spanish are tuning in.
Absolutely. Hispanics are about 20% of the U.S. population. Yet, as you mentioned, nearly half of the World Cup audience in the United States has been on Telemundo and Peacock. And so the excitement and the passion that our talent and that our production brings, Andrés Cantor certainly being one of them, it's certainly one of the reasons why audiences are watching on Telemundo. Andrés is a very important part of it. And certainly, his calls of these various Argentina comebacks have been very viral. But
the last one, he almost lost his voice.
I love that.
We joke with him like he needs to really make sure he's taking care of his, drink some honey and some lemon. We got to save you. There's a lot of games to go through. But it's been him. It's been other talent on the team. I mean, we've had some major names join our team, whether it's Andrés Guardado, Carlos Salcido. These are big names with the Mexican national team that have played with that team. And we saw when Mexico beat Ecuador, the Mexican team came over and started throwing them up into the air in celebration. So there have been so many great moments like this. Maxi Rodriguez is another one. Messi has given him like a celebratory hug before every game. It's worked out. It's been good luck because obviously Argentina has made it this far. So when you look at all of our talent and all the excitement that they bring and the passion into that coverage, and that's just not just during the game, but everything before and after and everything happening across our platforms, it's no surprise that to us that audiences are gravitating towards our coverage and watching these matches on Telemundo.
Hey, Miguel, so the Spain versus Argentina match, this is featuring two Spanish-speaking teams facing off in the World Cup for the first time, World Cup final, since 1930. What are the expectations? Are we going to see record viewership? Just talk a little bit about, what to expect for the game.
Yeah, I mean, any World Cup final is a dream scenario, but it's extra special for Telemundo and our audiences at the final features Argentina and Spain. I mean, these are two teams with massive followings, a tremendous history. It's the defending world champions against the defending European champions. That's never happened before. You know, the possession dominance of Spain, the overwhelming will of Argentina, and of course, arguably the GOAT, Messi. You know, Spain is the slight favorite, but I don't see how you can doubt this Argentina team with the way that they've come back so many times in this World Cup. This really does set up to be one of the greatest World Cup finals in history. And we certainly think we're going to set some records in this final come Sunday.
Miguel, after the World Cup, finishes up, we're going to be very sad. I'm going to be very sad. But obviously, we're going into the rest of the soccer season. Telemundo has some Liga MX games, as well as just signed a deal with Bundesliga to have some Spanish-speaking, telecast for that league. Tell us about all of the other soccer people can tune into on Telemundo once the World Cup is over.
Absolutely. I mean, Telemundo is home of the biggest sporting events in the world. Obviously, now with the World Cup, we have the Summer Olympics in 2028, which of course include men's and women's soccer. We're the home of Premier League, along with NBC Sports. You mentioned Bundesliga, which we announced earlier this week. We have a couple of teams in Liga MX, Chivas, Tigres, and Juarez. And Telemundo is also the Spanish language home of U.S. soccer for the men's and the women's team. So there is a lot of soccer coming down the pike, even after this World Cup, that we're really excited about. And having not just Telemundo and Universo, but Peacock as our streaming platform to be able to distribute all of this high-class and elite soccer properties for our audiences is something that we're excited about.
All right, so I've got to ask you, and this is courtesy of our Sebastian Escobar, because there is this running joke, as you know, Miguel, I think, on social media, that all the English-speaking fans who switched to Telemundo for the World Cup are now hooked on their primetime telenovela, El Señor de los Cielos.
Very nice.
Thank you. Muchos años, you estudié. Are you tracking this telenovela fan crossover? I'm just curious. And Sebastian, by the way, is a fan of the show. I did not know that about him. But anyway, are you tracking this crossover?
Yeah, absolutely. I mean, if you've seen our World Cup coverage, we certainly were promoting El Señor de los Cielos, Operación Triunfo, El Turco, a bunch of Spanish properties that are really important for Telemundo that launched on July 7th. So we're certainly tracking it. There's been a lot of great crossover from World Cup audiences watching these properties on Telemundo and even also on Peacock itself. We've seen a lot of World Cup audiences on Peacock sampling and trying other non-World Cup content, which is actually really impressive when you think about it, because 104 games, that's a lot of commitment for World Cup soccer fans to watch. That's a lot of hours of soccer. There's not a lot of time left in the day, and so they're still finding time to watch these other properties. There might be some agreements there with wives and husbands, some trade-offs, because it's a lot of commitments for soccer this summer. But we're absolutely tracking that, and it's been great to see.
So after this World Cup winds down,
speaking of commitments,
what are you guys going to be thinking about for the next few World Cups? Is Telemundo interested in securing the media rights for the next one, the one after that?
Right now, we're just focused on producing Sunday's World Cup final. And let's not forget, we also have a third place match. We've talked about the final, but we do have a game tomorrow in Miami between France and England. So our focus is there. If I can, maybe Sebastian will appreciate this, but if I can quote a go-to athlete response, we're taking it one day at a time, and we're focusing on what we have in front of us these next 2 days.
Miguel, I think one of the other interesting things when we're talking about France and England is that game is just as competitive almost as this Spain and Argentina game. Some people saying that it actually could be the final. Do you expect to see viewership for that as well as just as high as the final almost?
Well, I don't know that we would see it just as high as the final. The final is on its own level. But we're certainly going to see tremendous audiences for the third place matchup. And I think for a lot of reasons. One, as you mentioned, it's England and it's France. These are two elite teams. They have some of the biggest stars in the world, whether it's Mbappe or Harry Kane or Jude Bellingham. One of the other things that we've seen in this World Cup is the tremendous viewership that we've seen across these 104 games ultimately hasn't been tied to one particular team. Absolutely, we've seen record and historic numbers for Mexico, for Team USA, but it's really been across multiple teams. It really speaks to the quality of play in this World Cup. Matches with England have set records.
Yeah.
I mean, Cape Verde, Cabo Verde, those were some of the best World Cup matches in this tournament. And before the World Cup, a lot of people didn't even know where they are in a map. So, yeah, we definitely expect great audiences for this matchup tomorrow between England and France. But, the World Cup final, it's in its own category.
Hey, Miguel, just got about 30 seconds left here. Any regret not cashing in on the hydration breaks and running ads during them?
None at all.
Okay.
We have monetized the hydration breaks, and we made a commitment to our audiences to stay on the feed as soon as the game starts, make sure that audiences don't miss any moment of the action. And it's actually one of the many things that audiences have come back to us as positive sentiment around our World Cup coverage, whether it's our production, our talent, our hydration break strategy. So we're really happy with everything that has gone down for the World Cup as it relates to our production and our strategic decisions.
Listen, thank you so much. We know it's a busy time for you guys, especially as we head into this final weekend. So muchas gracias. Thank you. Be well. Miguel Lorenzo, he's Senior VP of Sports Content at NBCUniversal Telemundo Enterprises, joining us there from New Jersey. And of course, Vanessa, I know, what are you going to do after this?
I'm going to go into a depression.
I'm so sorry. There'll be more. Football,
The Women's World Cup 2027.
Okay,
Brazil. We're ready.
Vanessa Perdomo Maglione. She is, of course, Bloomberg News sports business reporter and co-host of the Business of Sports podcast. Check it out. It's on the Bloomberg, on the terminal, and also wherever you get your podcasts. All right, let's get a check on trading as we are just about headed into the last hour of trading on this Friday. And we've got a day where we're down.
Yeah, tech stocks are selling off. Pairing losses just a little bit, but the NASDAQ 100 is still down about 1.2%. And the SOX, Carol, the Semiconductor Index, on pace for the worst week since 2025. It's down about 10% on the week. But as we were mentioning during the break, this index has been bouncing around a lot. It's had a huge run up. It's come down a little bit, but even last week it was up 3% on the week. So it's like some days it's up, some days it's down. I guess that's what makes a market.
Still up exactly 65% year to date. But we should point out at one point it had doubled for the year. So we have definitely pared back some of those gains.
It entered bear market territory today.
Exactly, right? And so that definitely catches our attention. I'm Carol Messer along with Emily Grafeo. Let's get, though, to some stocks on the move on this Friday. With us to do that is Bloomberg News Markets Live strategist Tatiana Darie. She joins us here in studio. We're going to talk some tech names. Hi. Let's start with Apple, because we did have a story out on the Bloomberg today.
Yes, Apple shares up about 0.3%. It's been bouncing around today, and it's been a standout this week from the rout in tech that we've seen. And ironically, that was due to its lagging AI technology, and they've been lagging so much over the past few years because they haven't been doing enough on AI. Now that's working in their favor, and that makes Apple a haven from this tech sell-off. The story that we had amid all of this is that Bloomberg's reporting the company and the Department of Justice are in early discussions about settling an old lawsuit from 2024 that alleges the iPhone maker violates antitrust laws. So that story also on the wires, and also just the broader macro story. We're getting new headlines about potential escalation in Iran, and the stock may be immune to what's going on in tech, but not completely immune to the macro story here.
And Apple today.
Go ahead.
Surpassing NVIDIA as the world's largest company. $4.9 trillion. That's the Apple valuation.
I think it's so interesting because we talked for such a long time of how Apple was kind of underperforming.
Like Tatiana said.
Like you just said, the stock is up 61% from kind of late March and up more than 20% year to date. So it's really fascinating to see how the narrative around it has changed. Ticker, of course, AAPL. All right, let's go to NFLX. We're talking about Netflix.
Yes, Netflix shares down about 7%, were down as much as 13 earlier, the most since April 2022, after forecasting a second consecutive quarter of slowing sales growth. So the numbers weren't too bad. A slight miss on revenue, a modest beat on EPS, guidance a little short of a consensus. But what really concerns investors is that they're forecasting revenue growth to slow down to 11.7. That would mark the slowest pace of expansion since late 2023. And I took a look at their CapEx and at their forecast there, and boy, it has been growing steadily over the past 2 years. years or so. So the company has been investing in new products, in sports and video podcasts and things like that. But if you look at the opposite chart of year-over-year revenue growth, that has been slowing. It has been going in the opposite direction. That underscores the fundamental concern here about Netflix.
They were going to do some M&A, but not anymore. I was just thinking about that. They had some more CapEx to do, but
and we
no
talked to
longer.
Argita Ranganathan saying that that's probably something that they need to do. They need to find some content property. I think there was some rumblings. Maybe was it Lionsgate or something? I don't know. All right, one more tech big name that we need to get to, and that is Meta. Ticker is, of course, META.
Meta shares still down about 3%, but have paired those losses so off the lows after reports that it is in early discussion to lease computing power to Anthropic, and this arrangement could be worth as much as $10 billion, according to some reporting from the New York Times. So basically what we're seeing here is more details about this new strategy from Meta of actually renting its compute and making a business out of it, and trying to justify and monetize some of those AI spent, not necessarily to frontier models, but anything will do as long as we do get justification for those very large capex numbers.
Yeah, people want to see that justification. Tatiana, thank you so much. That is our Stock Movers podcast, 5-minute episodes of the big winners and losers in the stock market. Find it on Apple, Spotify, anywhere you get your podcast. 30 seconds, your tease. You've got a story on the terminal about AI pricing when it comes to some of the hyperscalers. Just real quickly, what do we need to know?
Yeah, I mean, this is about cost per task among the AI models. What you see at the top are US models like Claude and from Anthropic, and at the bottom you see DeepSeek. And I think this really underscores the fundamental risk to the AI trade, the second mover advantage. If we can do the same or more with less, then what does it mean for AI stocks? And I think this is something which should really keep an eye on in the months to come and in the earnings reports that are going to come.
I think it's a really good point. People are starting to get discretionary in terms of which models that they're using. Tatiana, thank you so much. That's going to do it for the first hour of Bloomberg Businessweek Daily. Do not go anywhere. Emily and I are coming back. We got lots more coming your way, including a deep dive into all things Elon. We're staying on the trade, but if you're watching on TV, the close coming your way.